Bill, that was great. I've known Bill for, I don't know, we stopped counting at this point. And it's important to have the history of someone like Bill to remind us where he came from. It's what I tell my kids, like the world has changed, it's a better place despite all the complaints they have. And this is an incredible time. And there are no kind of better champions, especially in the world of kind of bold ideas than Bill Gross. So thank you so much for joining us. You're a role model for me, and I think hopefully because of the talk today, an inspiration for others in this room. So we're going to switch to a panel. So I'm going to sit down and introduce our guests. I thought it was important, the idea of this startup, this showcase we're seeing. And I've started up a bunch of companies, and we always talk about money. And I can tell you, Bill, money is important, but it's the idea and the team. But it's important to understand how money works, how capital flows, what VCs are looking for. So I'm really pleased, and I'm going to have the panelists introduce themselves. But I tried, when putting this panel together, to represent some diversity in the venture capital ecosystem. Jay will talk about brand new fund doing life sciences. Shaheen, Northern California, we're happy you're here. But you can talk about the work you've done and maybe how the ecosystems. Karen Norton from Upfront, and boy, that's a great success story, what Upfront has done in our ecosystem, so I'm glad you're here. And Rick, you and I have been in the trenches together for a long time, and they've really worked hard and created really a tremendous fund, but it wasn't easy. It was a long road, and you guys have really hung in there. And I tell people, building a VC fund, you are an entrepreneur when you create your own fund. Right? And you have the time you feel most entrepreneurial when you're going to LPs and passing the hat. So anyway, I want to start off the panel. Thank you for once again attending. What I'd like to do is quickly go across the panel, and if you could talk about maybe a minute about yourself and your fund and the type of investing you're doing, so people have a context of who you are. I tried to set the stage, but Jay, why don't you start?
Great, thank you.
Yep.
So our fund is Wavemaker 360 Health. We're a healthcare fund. As Andy mentioned, we're essentially a brand new fund we started this year. It's a $25 million fund. We focus on healthcare. Our thesis, if you will, is around what we think and think deeply about and are excited about is the $3 trillion healthcare industry changing its business model, going from 40 or 45 years of fee-for-service to a new business model, value-based payments. And if a $30 trillion anything changes its business model, it's going to create a lot of disruption. And we think entrepreneurs, people in this room, that's what entrepreneurs do. They come out of the woodwork to take advantage of disruption. And so our fund was set up to fund companies that are taking advantage of the healthcare industry's transition from lots and lots of fee-for-service mentality stuff to value-based health. And that's what we're
super exciting. Congratulations.
We do seed and Series A stuff.
Right. Sheen, what about you?
Thanks for having me, Andy. I'm a partner at Lux Capital. We're a venture capital firm based in New York and Menlo Park, and we look for amazing founders like yourselves, leveraging unique technology to build and own massive markets. We've been around for 15 years. We've funded over 120 companies over the course of 5 funds. Current fund is $400 million. We also have a $300 million opportunity fund. I grew up in the Bay Area, did my PhD here at UCLA. It's good to be back. And I love Southern California. I have a home here, and I come here frequently. And I had led our investments in rockets, satellites, driverless cars, manufacturing automation, computer vision, virtual reality, all the
cool stuff. That's the cool stuff.
And always on the lookout for founders that have a unique take on a market that they really understand, a customer that they know intimately, and have some kind of trick or secret that Bill Gross was alluding to really create a market where none exists. And we're looking to partner with those founders.
Awesome. Kara, what about you?
So hi, I'm Kara Nortman. I'm a partner at Upfront Ventures. We are the oldest early stage venture fund in Southern California. So we've been doing this for 20 years. Actually, some of our early investments were with Bill back in the day, and I think City Search and Overture before my time. And we are investing a $400 million fund, primarily seed and Series A. We also have an opportunity fund, so we opportunistically do things at a later stage. And really, we're looking to invest in the best talent in Southern California, and then we invest elsewhere as well at the earliest stage. So we're very frequently the first institutional board member and then we're with a company through their entire journey, which sometimes goes up and sometimes goes down, and big believers that your returns kind of end up coming from those that go well, and your reputation comes from the way you act at all other times. And then we're there with the ones that really work when they go public. So some of the companies we've invested in locally are companies like Ring, TrueCar, Goat. So we do every Bird.
Bird, yeah.
Get nervous talking about Bird.
Huge fan.
And we're very long, we're very long Southern California, and I'd say we do everything from frontier tech to tech forward consumer businesses, enterprise SaaS, et cetera. So we really are generalists down here in the Southern California market.
I think we should also mention Mark Schuster, who's part of your fund, has really been a great spokesman for Southern California forever. And has a great blog, and I think many of the entrepreneurs.
Yeah, Mark is my partner. He actually was my board member. He funded my startup when I started it. He was my first tech friend when I grew up in the San Fernando Valley. I moved back 10 years ago, somewhat reluctantly. Mark convinced me that I should become Long LA, and now I can't believe I required any convincing. And he's a prolific blogger and a wonderful partner.
Rick?
I didn't know he blogged.
You hadn't heard?
I didn't know that. Rick Smith, Crosscut Ventures. Andy, thanks for having me here. I've been doing investing in venture for 21 years. I realize I need to update my picture. A 10-year-old picture is that's not doing
You're
well
looking
anymore.
good, Rick.
I don't know. I'm looking at the screen here.
That's from the phase in your movie career, I think.
I wish I looked like that. So I
Oh
actually did invest in Bill Gross indirectly about 20 years ago. I will say we meet some of the smartest, most creative people in the world every day. It's part of what I love about my job. Bill's a true genius. So what you saw up here, that was gold. So great job. Seriously, great job there. And of my 20, everything he was saying, each time he came up, again, I wish he had 9 and 10 because I kept saying, yeah, that. I just can't say it like that. He just, the way he looks at the world is very creative. We're an early stage fund, pre-seed and seed and some Series A. An ideal investment for us these days is probably half of a $2 to $4 million round. Really anywhere in technology. We have invested in anything from women's shoes on a monthly subscription basis to some pretty deep tech, AI. We did make a space investment recently, deep space, new space. So we are entrepreneur first. I've had the pleasure of being in Southern California now for 21 years, investing in venture. When I left my prior firm before we started Crosscut, I was on 8 board seats. 7 of them were outside of Southern California. Now we have the good fortune of spending almost all our time in Southern California. We do invest in New York, we invest in San Francisco, we invest anywhere where we think good entrepreneurs are. But really excited to be working with Andy and the Alliance to kind of showcase and lift up some of the entrepreneurs in this room and in Southern California.
Rick, thank you for that. And more than $1 billion of risk capital here on the stage. That's great. I constantly or regularly meet entrepreneurs, and they're building their product, and they're always thinking about funding, the fuel that goes into your tank. By the way, I remember how much it used to take to build a company. So the ability to create great companies in a capital efficient manner has changed radically, but we still need funding. At what point, and anyone can weigh in on this, do you think an entrepreneur should be reaching out to VCs to kind of tell their story? Should they wait till their product's ready to go? Or what would you suggest in terms of getting in front of VCs, number one, and number two, when to make the ask to say, hey, I want capital? Can you give us some of the entrepreneurs some insights around that relationship building process? Does anyone want to start?
I can start. So I funded companies that were at pre-business plan, pre-team, pre-even incorporated company stage, where we wired the money the day the company was incorporated to a $12 million check when the company had 50 plus people and well underway on technology development. And I think it really comes back to the partner at the firm that you're working with. So some firms, I think all of our firms here, are equipped to work with founders at various stages. It really depends on the individual at that firm that you think would be most helpful at the time when you're working on this company, depending on what the company is doing and that person's prior experience. So in the cases of 2 companies I did in the past year, these companies did not exist when I was approached by the founders, and we were the first money in and the majority of that financing. And that was because these were individuals that were brought to me because the people that referred them to me believed that we as a firm and myself as a partner would be the right fit to help the company at this stage. That obviously is not super common because there's only so many of these companies that I can take on. But I think the question for the founders is, there's a lot of firms out there that can do very early investments. The question is, is the partner that at that firm the fit to be able to help you at that time? Kara has started companies from scratch. There's many companies out there that she can be helpful with, and you shouldn't be shy to approach her. Even if you're super early, which is the truth, and I'll let you speak for yourself, obviously, as well.
No, thank you. I mean, there's a lot of love up here. I think it's actually one of the wonderful things about this market, and Shaheen fits in so beautifully in this market, is that it's I did VC in a couple other markets, and it's a very, very collaborative one where I think we're all rooting for each other to succeed because the whole ecosystem succeeds. And also just seems like we have a higher per capita volume of good human beings in VC. But I mean, which maybe isn't hard in the last year.
It's a low bar.
But anyway, we can get there. But I would say VC is a game of exceptions. So I'll tell you, our median initial check in our last fund was $3 million, and then we put in 10 to 20 over the lifetime of an investment. So we're comfortable coming in early. We like to be there to catalyze future rounds, and then we'll write one that's 15, and we'll write one that's 500,000. And so that's not a great answer for all of you guys. The way I guess I would think about it is everything we tend to invest in is at a pretty subjective state, and so.
What do you mean by that?
Yeah. Even if you have data, I mean, if you get to true growth stage, or you can look at numbers like what's going on with Bird, you at least have some data that you can hang your hat on. But there are very few companies that look. We almost never invest in a company, even our biggest winners, multi-billion-dollar public companies that. We come in and it just goes like this. It almost always goes like this, even if it goes up and to the right eventually. And so all you have when you're investing at a subjective moment is your conviction around that person and that human being. And so it's really just having high EQ and awareness around who to get in front of, right? It's not just the firm. Who's the individual at the firm that's most likely to resonate? Do your work on the top 5 or 10 people that you really want to invest in you. View every end of a conversation as the beginning of a new one. Get people that you know and trust to introduce you at the right time. And so sometimes I meet with really high potential people out of Snap or Riot or SpaceX a year before they're thinking about starting a company, but a recommendation comes from someone who says, this is an incredible person. You should spend a half an hour with them. And then other times it's hey, I know you're not that interested in this space, but you should really look at this. So it really is sort of like building that pattern of meetings or interactions, even if it's over email. And then at the right time, hopefully you also get to do the same due diligence on us, because at the end of the day, you want to bring in somebody that you want to go on this 10-year journey or more sometimes with you. And sometimes the best thing to do is not take money from us, oftentimes. And you really want to make sure all of our investment profiles line up with what you're looking to do.
Rick, any wisdom on this?
Well, I think they said, I'd probably add something maybe a little different. At the end of the day, we all want faster cars and bigger houses and nicer vacations, right? We're in this business to make money for our investors. We have money given to us, and we have to give a higher return back to them than they get from somewhere else. We don't get more money, and we're out of a job. So we're just trying to make money, and we do that. We're really risk managers. At the end of the day, I mean, you talk about investing from 2 people in an idea to a $10 million run rate or whatever. We're just trying to manage risk, and sort of for that dollar that we put in, what's the expected risk to get $10 back? And sometimes, and I've done it, that's someone walking in and saying, I just want to back this person now because I'm afraid if I don't, someone else will, we're going to miss out. In other times, we can say, you know what, I think knowing this market, I think we can wait for some metrics to come back and we still won't lose the deal, or it's worth losing the deal in this case. So I think it really is so hard to kind of answer that question broadly. But I will say this, the market speaks. And so if you talk to 5 or 6 or 10 investors and you're hearing one thing or two things, that's probably what most of us are going to think, rightfully or wrongfully. And it may be that you just need to wait a little longer to raise that capital. You can say, hey, you people don't want to take risk on me. Well, we do, but we don't want to take any more risk than we have to. So we're just constantly trying to, we get 4,000 business plans a year. We do 8 investments a year. So we're just trying to, at certain times, we're just trying to deflect. And if you happen to walk in on that day, I'm sorry, but we're deflecting and we're not giving you the due. Hopefully we will. But it's a very subjective business that we're in, and we're extrapolators. And the more data you have, the better. But sometimes you need more capital to get data, and that's where we all.
So Rick
That's
says,
not a great answer.
Rick
That
says,
is the truth.
wait as long as possible until you think someone else may do the deal.
Well, if you're raising money, you raise money as soon as you can, but you can't raise money sometimes. Sometimes you just need more metrics. Maybe you aren't proven, right? If you're a 2-time successful entrepreneur, well, we're not having this conversation. You're just raising money from whomever. If you're 24 years old, coming out of Caltech, it's going to be harder to raise that capital on an idea. You can, but it's going to be harder. So you just got to have a very good sense of where you fit, and part of that sense is just talk to other entrepreneurs. Like, learn as much as you can. Sit down with other entrepreneurs and sort of hear what they're seeing, and then make your own decision. But it's just, it's hard to raise money. Even Bill said this is the best time to be an entrepreneur. It's also one of the best times to raise money. It's still really hard to raise money.
Right. Jay, you're in the healthcare life sciences area. Different in that world, or?
I agree. There's no too early for us. There's only too late. On the way in here, I can't see the team out here, but this event last year, I ran into.
You dropped a term sheet already? Awesome. Good for you.
No, but this event last year at Cal State LA, I met a group that I believe is in this room, and I met them in parking lot 8 on the way walking over here, and we have gotten to know each other very well. And if you read the top lists, things that we all care about as team, then team, then team, and then everything else. Best way we can get to know you is if we get to know you early. If we get to know you terribly late in the process, we just have less touch points. We can't get to know that team as well, and that's what we crave, and therefore early has to be better than late.
Well, I think we talk about capital availability, and there is a lot of capital in Silicon Valley, and I think the challenge is if you show up just with your business plan, there's no context of where the relationship exists. And I think my view is in the early stage world, kind of who that person is and that kind of dialogue and that relationship building kind of creates a sense of credibility and trust, which is critical in the early stage of career. You said it, it's gut. And if we had a bunch of metrics, then it's late stage and you can look at that, but the relationship and the knowledge of the person is pretty important.
Yeah,
but obviously how that person comes into you is really important. If you don't know them well and it's early, who was another company that introduced us? One of our companies, great. One of theirs, great, right? I mean, how you approach a VC is really way more important than almost anything else, right? Going in cold is not going to be.
Well, you got 4,000 business plans. Who do you could spend your whole day meeting and only talk to 10% of those.
I want to just give everyone a little bit of hope. One thing that struck me about Bill's speech was how positive and inspiring and hopeful it was, and sort of like sometimes we're like the dream killers, and actually I think what we need here in Southern California are bigger I mean, I said this before and it's going to sound crazy, and maybe it comes from spending too much time in Silicon Valley in my past, but what we need here is more ego, bigger aspirations. Punch you in the, somebody punches you in the face, you punch back 10 times. And I think that's something for Southern California entrepreneurs. It's something for female entrepreneurs. It's just, it's something as a city we need. And so I was sitting there, I think, just kind of inspired by the OG over there giving us that positive feeling. But the one thing I was going to say that, I actually just think the thing I disproportionately think about now, sitting on 8 boards versus maybe 4 years ago when I sat on 0 boards, is how good is this company going to be at fundraising? I am really comfortable seeing something that other people don't see, particularly with a fund of our size, because if we believe in you, we can keep funding you if you're being a good steward for that capital, even if it's not developing as quickly. But if you don't want to invest in fundraising and you take money from most of us, the journey doesn't usually go that well these days because you are trading off profitability for growth. That doesn't mean we don't want great stewards and conscientiousness around margin, because in the end, private equity and VC do converge. But for those early years, I think the thing I assess is, can you fundraise? And now you can tell a lot of that in how you wrap the present in the early days. And then I kind of think our jobs are to look like an idiot for about 12 to 18 months and then look really smart. And you have to be okay looking like an idiot, you know, half the time, and being good human beings and conveying, maybe we got this wrong. Where do you want to take this? Do you really want to keep going? But you know, so maybe that's a slightly more optimistic take. Maybe. But
I think, you know, you're talking about fundraising, and Bill mentioned storytelling.
Yeah.
And I think especially in the world of, you know, a lot of engineering driven, they want to tell you the charts and they want to show you the data. But I think it goes back to Bill's point around how important storytelling is for fundraising. Let me ask a different question. You kind of alluded to this a little bit. Can you talk about the state of the venture capital market in Southern California? Certainly early stage is very local. I mean, I think when you're very late stage, it could be global, it could be some sovereign wealth fund. But in the world of startups, it tends to be more local. So I think it's important that this audience have a flavor for what's going on in Southern California. You mentioned this collegiality. Are things going well? And how would you describe Southern California venture ecosystem?
Yeah, I think, I mean, and you guys can chime in too. I mean, I think it's becoming bigger, more diverse, many more kinds of founders, people relocating, big, you know, kind of permanent companies emerging, whether it's TrueCar or Cornerstone or Service Titan or, you know, Trade Desk. And I love to mention the enterprise ones because I think we overly focus on consumer. I probably should mention some of ours like Ring and Goat and the like. But you have big permanent companies that are kind of creating that next wave of talent. You also have a lot of disaffected people from other parts of the country who are seeking something different and coming here. And then, you know, I mean, you have a lot of capital flying in and a ton of seed capital that's emerged. So it's still not easy to raise money. It's actually extremely hard. I mean, almost all of our companies, even our best companies, get 50 no's and then get 4 yeses all at once. And it's, you know, if you knew who those people were who had a thesis and were looking for it, you know, you would go to them immediately, but you don't always. But it's, you know, it's a great time to start a company down here. And I started off 10 years ago thinking about flying up and taking jobs in the Bay Area again. And now I think I just couldn't imagine doing this job anywhere else because it is fun to do this as a group and to win as a group and to, you know, kind of just be in a completely different market and then pick our lanes when we fly into other markets.
So Sheen, but you're down, you look at Northern and Southern California. I'm curious what your view is of Southern California venture ecosystem, and clearly the granddad or the daddy is up north still.
Sure.
Of
We
all
as a
venture
firm have probably 7 investments in Southern California, and I'm overseeing 3 of them. You know, there certainly is a lot of interesting action in Southern California. What's lacking, unfortunately, is the level of sophistication and I would say veneer that exists up in Northern California. And a lot of that has to do with the culture up in Northern California. So people who start companies in Northern California tend to come out of, you know, Facebook, Google, Twitter, you know, Pinterest, Uber, and they have spent their entire careers selling product to their you know, to their superiors at those companies, and are very good at telling a story, sharing a narrative.
The storytelling again.
The storytelling.
Yep.
And that's selling. And that selling is not only limited to fundraising. That selling applies to recruiting. It applies to getting a customer who has their business at stake to take a bet on you as a startup company. And so the selling is something that is constant. It is not just for the purpose of fundraising. And that is something that unfortunately is a little bit weak down in Southern California. I feel like as if there is far too much emphasis put on assets down here because we are an asset-rich community down here. Whereas up there, these assets are somewhat commoditized and there's more emphasis put on the sales part. But guess what? That sales part helps these companies, you know, take huge pay cuts, join these companies, punch above their weight, raise money, hire more amazing people, and create this virtuous cycle. We do not see that virtuous cycle happen as common as we'd like. Now there are the exceptions, like with Ring, for example, but we do not see those virtuous cycles as common as we'd like in Southern California as we do in Northern California.
It's interesting because you think of like the Hollywood legacy of the storytelling, and then we can't, as the entrepreneurs in the community, they kind of overly humble and kind of talk about the metrics and kind of they just don't maybe get bold about it. Yeah.
In that case, I just thought we're probably more, and it's a good point, first of all, we're moving. So you were talking about a static shot, yeah, maybe. But I've seen a big change in 21 years. But we're probably more like aerospace than Hollywood, right?
It's a startup industry.
It's the I got to prove it. I got to have metrics. I got to have all this stuff. And it's one of the first times that LA's been accused of being more substantive than sizzle. But I think that's a fair observation.
Sid, did you want to add something to that?
Yeah, we're seeing just in terms of another change in the landscape, and of course we're healthcare only. We're seeing a lot of growth in hospitals and other big healthcare organizations jumping in and doing what the four of us do for a living. We're working with a company right now who took them to Northeast Ohio, brought them into the office of the CEO of that hospital. Hook, line, and sinker wants to buy this technology, but conditional on I want to put money in the company. And it seems like, I don't want to sort of say it's the Techstars and Cedars phenomenon, but it just seems like another place to go to look. Not that we don't want to meet with all the entrepreneurs in this room, but hospitals have a lot of money. They have a lot of money, so therefore, where can they deploy that capital? They're now starting the funds, and they're in competition with us. And they don't care.
Mayo Clinic is leading the round of a deal I'm looking at. Now, we don't do healthcare, but I don't know where that came from.
And the nice thing is they don't care if the founders came from Twitter or Facebook or Google or know what a hoverboard is, because they don't know what any of that stuff is. So if that's where your weekend, hospitals and big healthcare behemoths become sort of somebody that can speak your language a little bit more and care nothing about sizzle. Although I completely agree, I wish people were better storytellers, and I wish number 8 on Bill's list was number 3.
The storytelling.
Yeah.
It's interesting. So a lot of the companies we'll see this afternoon are obviously research-based. They're spinning out of universities. So intellectual property is an important part of what they have to bring to the table. You don't have to read very much about the history of the ebbing and flow of the value of intellectual property. Certainly, in the world I spent most of my time of software. Can you all talk about how you think about intellectual property and patents and that part of kind of a startup's asset list or something they bring to the table? How important is that? What does it tell you about a company? Does anyone want to kind of weigh in on that?
I can start. So
you have a PhD, so you're going to be able to.
He's the most
maybe I'm probably most qualified.
In the most in shape, too.
Please. So the patent office was created in the first half of the 19th century. And so, in fact, there was a gentleman from Raytheon being interviewed on Marketplace. By the way, who listens to Marketplace?
I love that show.
Love it, love it.
Kai Rizdal.
I'm sure all of you guys heard this. But he did his first patent at Raytheon, which is around the 5 millionth issued patent. And he filed, or was awarded, the 10 millionth issued patent this year. So in a period during this guy's career, the number of issued patents doubled. And so that should tell you something about the value of patents. Now, I view patents as an investor, as an asset that could provide us with some downside protection. But for all of you in the audience who know about VC, we're not in the business, we're not a fixed income shop or real estate where we're trying to protect downside. We're in business here. Our LPs have plenty of other areas where they could invest to protect their downside. They're investing in us to maximize upside, to create double-digit returns. And so although it is nice to have an asset, although it creates some level of security, although it does provide a basis for a story, then it's great to have it. But at the end of the day, what is going to be valued is your product, is your brand, is your distribution, is your reach. It is the market that you will own that will value you, whether you're selling shares in the public markets or you're getting acquired by an incumbent.
It's funny you were talking about the assets being kind of downside protection. I was thinking in my mind of a Ferrari salesman telling you about the airbags.
Yeah.
It's like, this thing's really fast, but if you kill yourself. So what do you guys, Rick, any ideas about intellectual property?
Well, I would just, I agree 100%. I think, new creative ideas are a commodity in our business. Like, that idea is unique, but we see so many of them. We're much more concerned about how do you take that idea and make a business out of it. The patent itself is not so important. I think that I liked, though, seeing technology that might provide some defensibility or some time that we can get a head start. So, a patent may be a reflection of that. But I think relying on patents too much has not, in my couple decades of doing this, proved to be very, very useful.
I agree 100% with my esteemed colleagues. The only other thing I'd add is, it's something that I would think about in diligence in the same way I think about regulation. And is there something that could go very wrong to put this company completely out of business in the next year or two because they're spending the next year or two fighting lawsuits, if they're kind of going into a territory that a big company might find threatening, right, if they start raising a lot of capital, et cetera. But I use it in my mental model. I really don't use it for downside risk because if we're not thinking about that. We're kind of lose 1x to make 100x sort of thing. But I do think about it in terms of distraction, I guess, if you don't have it and you might need it in the next 1 to 2 years.
Especially if you get successful, if you're a little fledgling startup, no one knows, but now you're suddenly successful and you're stuck in a huge litigation battle because you hit someone's radar screen.
I think, Jay, in the life sciences, though, there's a little bit of a twist on
Oh,
the patent
sure.
piece.
Yeah, real life science, I think, which is not the sport most of us play all day long. Different answer, but even in our firm, I don't obsess about it, I think is the easiest way to say it. I care about it, but I would echo these. It's way down on our list of things to think about.
So a lot of the teams we'll see today are just getting started. They're researchers in most cases, principal investigators, postdocs. What advice would you give them in founding their companies in terms of, should they have a partner, team building, or, it's a different thing getting out of a lab and trying to build a company. So I think everyone in around this little conversation has an experience in that area. I'm just getting started. I'm an entrepreneur, spinning out a company. What would you tell me in terms of making that leap to kind of the commercial side? Any good advice that you want to share?
Unfortunately, Bill stole a lot of our thunder, I think.
We should have done Bill. Bill should have
I'm
presented after our panel. Next time you're presenting after a panel.
So, to go back to Bill's presentation, for us it's number 4, and we spent a lot of time with companies even before Bill's number 4 with the product market fit. Come into the office, come into your lab thinking about that. Revenue is the be-all, end-all proof of product market fit, but there are a lot of other things you can be doing in training your brain and your team to think about so that when you do get across the table from us, there's other ways of indicating it. There's as simple as, we've surveyed 100 people. I'd like to look at that. So many people come in and talk to, I'm sure, all of us, and that would have moved the needle with us, even if they're 2 years away from their product getting to the market. But there's lots of things you can do to get us there to establish that product market fit. But you have to train your brain to think about that. And a lot of entrepreneurs that's not a muscle they use a lot. They need to think about using that muscle more and weaving that into that 5-minute or 50-minute conversation they have with us way more than they normally do.
Especially, I think, when you're a technical engineering research space.
Right.
Yeah, I'll save you, but I just remember a story at Caltech real quick. I talked to this professor, great idea, endoscope, brain, all this stuff. We get to the bottom of it, after a half hour, it's like, oh my God, it's great. And how big is the market?
Right.
I don't know. Well, let's talk about it. And we end up at the end of a 20-minute sort of exercise, it's a $10 million market, right? Which for us is not even beginning. I learned from that, go find someone who understands. You could be a business student at USC, right? Or UCLA, right? Right?
Don't start a riot here, come on.
Right. I went to Illinois, but just get someone who can help you think about product market fit. What's the market though, right? If you've created a great device, but you don't even, or a solution, whatever it is, it's like just the basic stuff. So there's people out there, believe me, there's people who would love to get involved with a startup who don't have an idea to save their life, right? So get involved with those people. There's a lot of networking events in Southern California now. Find some business people and just talk. Find other entrepreneurs and just talk. Market, product, what's the marketing going to be? What's the team going to look like? How much capital do I need? Just some basic stuff. And I think it can help start retrain the brain to think about how we are going to need to think about it at the end of the day, which is there a real business here or not, regardless of what the product is.
Other input on getting started?
Yeah, I feel as though academic or very technology-focused founders are like highly trained athletes. You can get a pro soccer player. He'll play great soccer, but like it's not clear as to whether or not they will play baseball. And to Bill Gross's slide 7, which I hope all the academics paid attention to, what's needed to get you from 0 to 1 is absolutely not what you need to get from 1 to N. And the trouble with academics, like myself, I spent the first 10 years of my career cooped up in a lab across the street underground. And I got to where I got through focusing on one thing. And a human, we're all human beings here. Our brains are wired like, we survive by running away from the saber-toothed lion. Like, we are trained to think ahead in terms of what got us to where we are right now. And so founders who spent so much time in that setting and succeeded in their own minds pay very little attention to the additional talents that are required to get the company to the next level. And for us as investors, we look for people that can attract people that are better than themselves, that complement them both cognitively and professionally in these other areas. So product, and then building a team around multiple products, and then building sales and marketing, and integrating across organizations. Like, these are things that are absolutely needed for us to even generate a minimal return on our investments. And so anything less than that would be barely getting our money back. And so that's a challenge with these technical founders, and that's especially common here in Southern California, where most of the founders come out of industries that are very well established and have spent many years in those industries and are very laser focused on what they're doing.
But, I think about the research focus being very deep and down into a very, very micro piece to make a breakthrough, like the more research is oriented. And then the integrated function of being an entrepreneur is so horizontal. It's like, and that's an orthogonal skill, that's a technical term, to, that view and I think that's what you're doing, you have to retrain your brain. So any other responses?
I've got a couple quick ones.
Tell us a good story.
Well, I can tell you a good story. It's
Show us your storyteller. Come on.
Building on Shaheen's point. I'll sound like an HBS student for a second. We'll drop every business school other than this one. But I worked in kind of deeper stack enterprise communications technology the first half of my career. And then I went and worked for this guy named Barry Diller and moved completely onto the consumer side. So I kind of have done both. And when I got there, he yelled at me a lot, which is something he does when he likes you, apparently. He said, I never understand a word you're saying, right? The way you describe businesses. And it was like the Silicon Valley jargon and, OSI stacks. And I'd been trained to sound smart, and I sounded smart to a lot of people on the enterprise side. But he basically said, you need to figure out how to speak again. You need to figure out how to talk. And he's like, do you know anyone in the Midwest? And
No.
I said, yeah, I actually married a guy from the Midwest. And he said, go sit with his mother and explain to her what you just explained to me, and then come back to me. And he really trained me a lot on language and everything from not using acronyms that become really standard to talk about products that lose meaning to the outside world. And what that really comes down to in this era where it doesn't matter what product you're building, we are all trained to act like consumers, even if it's aerospace, because we all live on our mobile phones and in beautiful end user experiences. To really, kind of figure out how to communicate to people what you do, inspire them to join you, and then build addiction in those end users. That's a thing I look for no matter the business. I'd much rather, if the market size is $10 million, but you can tell me why you are going to 100x that, that's fine. I want to understand what the 2 most addicted users you have are doing right now, if you only have 2. And just kind of the velocity of iteration to find that. That's what I would recommend to founders.
So I think, understanding how to communicate beyond the kind of the subject matter experts, so you can have this conversation with people who are partners, investors, super
employees,
important.
all of it. And again, we live in this super noisy world now too. So you have to, we all have ADD. We're all trained to be consumers. We all, are the worst version of ourselves much of the day. And you need to sort of stand out to those people and make them want to make a bet on you, whether they're joining you, they're using your product for the first time, or they're giving you money.
So is your mother-in-law willing to give time to some of these entrepreneurs?
I have 2 mother-in-laws, so I get a lot of practice, and they're both wonderful.
Okay. You speak common English to them. Any other thoughts on that? Yeah.
The word that comes to my mind as I'm just listening to the answers is just authenticity. I think maybe thanks to the Silicon Valley, maybe not thanks to the Silicon Valley, everybody can kind of get up and talk the slick talk. But that was more impressive 5 or 10 years ago than it is now, because it's a learnable skill. But to come in and know your stuff and come across in a 45-minute meeting knowing your stuff and somehow impressing us that you're authentic, that makes a big difference. If you can strive for that, it's not that Silicon Valley television show. It's coming across and seeming like you really get it. And we're healthcare, so it's a little bit more about people, and most of the founders that we talk to want to change the world in some pretty important, healthy way. But authenticity and striving for that is what I shoot for, or what I listen for.
Post-YC, just to add on that,
Yeah, sure.
post-YC, it is expected that every founder walking through the door is going to be slick, is going to have a great presentation, is going to be able to tell a great story. Like, that is somewhat become baseline now in our businesses. But like, we look through that and we try to tease out, does this founder or this founding team, do they know what they don't know? And are they able to round themselves out? Will they be able to recruit those superstars out of Google, Twitter, Tesla, SpaceX to help them augment that skill set? So those are the questions that those are what we look for in the presentation, more so than what probably used to be the case 10 years ago.
Just thinking about the conversation of changing the language. Once again, imagine a researcher who's probably majority of the presentations have been at research conferences to people who are deep in their domain, and now we're asking to talk to venture capitalists who are actually not necessarily deep. They're kind of more horizontal, right? You look at, could be aerospace, it could be materials, it could be something else. So you got to look at your audience and make sure you're choosing the language in a way they really understand. And I think being authentic about it's important as well.
In the old days, you talk about acronyms. I grew up in the Midwest, so I didn't need to go back to talk to someone that learned that. In the old days, we used to invest in more heavy technology. I really wanted to wire people up, and every time they said an acronym, actually buzz them so they would actually shock like that.
That's a startup idea right there.
It would take a few times through it, but eventually they would get through it, because we are at this level, and almost by definition, if I'm not in a room with the smartest person on that subject, I'm in the wrong room, right? And it's certainly not going to be me or my partner. So you're going to have the depth of knowledge, but you got to somehow figure out how to tell the mother-in-law in Missouri that, what you do, or wherever she is.
Yeah. But when I have this conversation with technical founders, they're like, well, how do they know what I'm doing is really legitimate? And my sense is, if you're doing something that's frontier tech, will you hire someone to look at the tech?
I stipulate up front, I assume this works. I assume what you're saying is absolutely true. It's the greatest technology in the world. Now, how are you going to build a business?
And then we call Shaheen to
Then we'll call
find out whether we're right.
Shaheen, you're vertically integrated.
That's true. We then bring in investors who know more than we do about that subject, or experts on it. Yeah. But in that initial conversation, it's like, save me the science. I don't care. Tell me the business, right? I mean, I care in a way.
Yeah, I mean, we do the same thing. I mean, the other thing I would say, one thing I just find interesting on the investor side is, look, is it helpful if you invest, exclusively in cybersecurity companies to know if somebody who's going after carbon black's market is slightly better? For sure. Is that exciting to me? Not at all. So I look at security companies. Am I the deepest security expert? No, but a lot of the way, if we frame up the world as industry experts, we're going to look at the world in one specific way. And I think the value we provide is actually bringing a lot of different inputs into this database to kind of, understand completely different patterns of go-to-markets and products and services and bring things together that haven't. And then we got to go validate whether all this stuff actually works, and and call the smart people who can tell us.
I can tell you that probably in a good half of our success cases, the original technology that was pitched to us was thrown into the garbage.
Yeah.
It did not even work. And the reason why it didn't make us flinch was because we had so much conviction in the teams that we were certain that they would find the people that will build the right technology that will carry this company to the next level. So you need to assume that the person you're talking to, whether again it's an investor or a recruiter or a customer, is assuming that this may not work, and they will need to believe in your ability to eventually, because things always take longer, come up with something or build something that does work.
Great. Well, I see we're just out of time. First of all, thank you for joining us and sharing your wisdom with us. Thank you for hanging out at the conference, and thank you for giving some great advice to, I think, many eager entrepreneurs who are seeking success. So hopefully some of them will show up at your doorstep with a great pitch, and you can put some capital to work.
And a story.
And a story. Okay, terrific.
Love it. Love it.